Each one teach one, and we rise together. Today I'm going to take you behind the scenes as we've got a call with another fellow investor that could do with a little bit of help when it comes to raising cash for his projects. First and foremost, I would underpin everything with mindset. We believed it was some sort of a curse when we originally started out, but in actual fact it turned out to be somewhat of a gift because we started out with zero. We were literally a couple of kids from a council estate that wanted to do something. We were resourceful, but we didn't have the resources. So we brought the resourcefulness, and then therefore we had to bring on board the resources. Having to do that from day one was key. I don't know whether you're familiar with property trainings and stuff like that. We've actually done a couple of little property trainings, and we sat in the room on day one, and there was people with £100,000 in the bank, £200,000 in the bank, millions of pounds in the bank, and we were, honestly, we felt that big. Because it's like there's people in this room that have got a load of money in the bank and they've got what seems like the same vision. We've got the vision and we've not got the money, so therefore we're not going to make it. All of a sudden, again, this is the mindset on the opposite. That starts to permeate. And I don't know whether you're familiar with Deborah Meaden on Dragon's Den. She actually said one time about if you have the resources or resourcefulness but not the resource, meaning the money, she says, but you've got the idea, you've not got a problem. She says, if the only thing you are missing is the money, the capital, you do not have a problem. The money is out there. And it's like when you hear things like that, at first you think, yeah, all right, it's all right for you, wishy-washy. But then, again, when you start to network and surround yourself with people that have got a different kind of mindset and you realise, oh wait, yes, there's a load of people out there that have got millions in the bank that are doing this, but there's actually also people that started from humble beginnings like ours that have made a success of it. So obviously then we kept our eyes on those people and did what we could to sort of rub shoulders with them. And then, like I said, it starts to cultivate this mindset and a firm belief that it is possible. People said to us early doors, stop looking at other people who've got money, who've got capital to start up. Stop looking at them with envy, because there will always be a point where they, quote unquote, run out of money. Their money is invested in deals and they then have to raise. And in actual fact, the person that I was speaking to at that time, they said if he was giving advice to any of those people with capital, would be forget you have capital. Go out and look to raise funds from day one. Only revert to your capital if you're unsuccessful at raising funds. When you actually think about the risk mitigation and the blueprint, the strategy for your investment, if you're looking at, let's say, your portfolio and it's a case of, right, we can take on X amount of funding, but you know that taking on that funding with the assets that you've got, you don't go past a certain level of gearing, including private finance and the assets themselves, and you can absorb a certain swing in the market and still be able to exit and clear off all private finance, all mortgage loans, everything, then that in itself, little things like this can give you that level of comfort. Let's just say we set 75% as a maximum gearing, and that would be a combination of institutional finance, that would be mortgages and such, bridging loans, that sort of stuff, and then the rest of that might be made up with private finance, and you've got the 25% margin on top. That allows you to sleep easier at night, because if you look at, for example, the last correction and say, right, what did the market swing? It might have swung, on average, let's say 17%, but in your area, it might have gone down by, 20% or something like that. If that was to happen again, you are more than covered, still able to exit and honour all of your financial commitments. So that might be one mitigation. And then another mitigation might be, over time, providing you can absorb some of the fluctuations in the market, the cash flow will ultimately service your investors. So you mentioned, has anything ever gone wrong with us in the past? So, for example, no major things, but we were going to be falling short on when we were able to recapitalise an investor. So there's options. You can cash them out with another investor. You can perhaps take on your own finance to service them. Or the other one is we just simply went to them and said, look, we're going to miss the deadline. We're more than happy to replace you with another investor, but we just want to come to you first. Are you happy receiving the interest that you're receiving? Would you like us to continue servicing it? And they said, absolutely, keep us on board. We believe in you, we back you 100%. We know your model. Yeah, keep us on board. So you realise that a lot of the stuff, and this is where it comes back to the mindset, it is in here. you'll put these narratives out there into the universe and almost have a conversation back with yourself, and it's not a conversation that's actually taken place. Because in that instance, I might have said, oh my God, we're going to go to this investor. As soon as we mention that we're going to miss the deadline, they're going to think everything's going wrong, something's gone wrong with the project, we're not going to be able to repay them their finance. And you start thinking all of these things, whereas the reality is, that's just in here. Have a conversation, say, look, we're going to be a bit late on the deadline. Do you want us to replace you with another investor? No, absolutely. We believe in you. Keep paying us the interest. It's all these sort of tranches that you get by way of experience that will give you the security that you need. So I guess it's about identifying what the first practical steps are for you to be able to go away with confidence and start to have those conversations with people. Our model was always get busy and shout about it. How can we go one to many as quick as possible? And it was always from day one social media. Social media does the work for you and has warm leads, people coming into you that want to invest in your project. Everybody likes a nosy. They watch what you do over time. They realise that you've got good values, you're credible, you've got experience, and they will opt in. And that's always worked for us. However, there's so many people that we know that genuinely raise finance way more than we raise, doing some real big projects, and they've got hardly a presence on social media. So there's more than one way to do this. And the reason for me raising that is that what is your strength? What is your skill set? Yours might be somewhat similar to mine in that, like you said, you're a bit of a creative. So I love creating the videos, love creating the social posts. I love the sound of my own voice at times, if you've not already noticed. And, I love sort of communicating with people through different mediums. So face-to-face, grabbing a coffee, a Zoom, and having social media do the heavy lifting and the early work works perfect for me. Whereas for you, it sounds like maybe that'll work for you also, but let's say that didn't. For you, that might be, whether you go playing golf, whether you're at the gym, it might be literally having conversations with people, just letting people know a little bit about what you're doing. And depending on what circles you have and what sort of background, like for example, a lot of people that we know that have got corporate backgrounds, they manage to raise funds, no problem at all for their project, purely just through their contacts. They will put an investor brochure together and say, through word of mouth, this is what I've been doing the past year. Here's what I'm thinking about doing in future. Do you know anybody that would be interested in getting involved in this? And they'll literally just direct pitch them and give them the brochure, because they already know these people are somewhat qualified as high net worth individuals. They've got money sat there. They already know they do a bit in stocks and shares, this, that and the other. And can they be competitive and add something to them? So one might be social media, another one might be offline, and there's loads in between. But again, where do you feel, if you were to analyse your network, that one, your strengths might be, but two, also the opportunity might be? This thing here, I get conventional networking. We do something that we call a 10 by 10, which is, let's say you went to the gym for a while. Let's say, I don't know, you've got one of your kids at primary school, one of your kids at secondary school, you've got the golf club, you've got all these different places. Come up with 10 places which you've had some sort of affiliation for some point in time. It may have been a Toastmasters speaking event or something like that, a club that you've been a part of. You write down all of those 10 places, and then you come up with 10 people from those 10 places. At some point in time, you've established a relationship with these people, and I'm sure you're a good person, and you've built up some sort of goodwill with these people. And I'll give you an example. You went out of the way for us, and you did that article on us. When you reached out, I genuinely responded to you. I do not care if you give us feedback on the website or not. I will give you my time. You went out of your way and you built goodwill with me. So reciprocity, the rule of reciprocity says, you reach out, I reach out, we have this conversation. And there'll be other people that you've built that rapport with without even knowing it, that you can therefore touch base with and say, look, here's what I'm thinking of doing, here's what I've been doing. Do you know anybody that'd be interested? Or might you be interested in getting involved in this? So this is why I'm looking to your phone, because all the money that you need to raise for your projects is in your phone book. Whether you realise it or not, the money is in there. Now, we've started to go beyond that, and we've had a couple of overseas investors, one from America, one from Dubai, but that's come later. Our initial investment has always come from friends and family. Then it's permeated out to friends and family of our friends and family. So it's like your second ring, so to speak. And then it's permeated out. And then just going back momentarily to the mindset and the institutional lending versus private lending. So in your mind, there's a difference between the two. And therefore that creates a barrier, a blockage and an obstacle. Whereas if you flip this and use this as a principle for every sort of challenge that you have, in terms of you think, oh, this is how I want to move forward, and you've got 1,000,001 reasons stopping you and holding you back. Challenge that and flip the script. So, first of all, money is money. Money does not care about you. Money does not care about your emotions, whether it comes from a private lender or whether it comes from an institution. It doesn't care. It's still going to do the same thing for you. But if you find it difficult and there's a difference to you that makes you not have that conversation with a private lender, flip the script 180, ask a better question or propose a different solution. Would you rather that the interest that is getting paid to the institutional finances be paid to somebody that you know, a private lender, a friend, a family, or a friend of a friend? Would you rather they had that percentage, or would you rather the institutions had it? Because they've got more than enough. I personally would rather it went to somebody private. It feels so damn good to send people thousands of pounds every single year. Genuinely, it really does feel great. Whereas there's no feeling whatsoever when it goes to the institution. And if I think about it, it's a little bit of a negative one because I know it could be going elsewhere. So if you can find private money that genuinely serves somebody else and their interests, and also serves you and your interests because it allows you to move quicker on deals, buy things that otherwise wouldn't be mortgageable, all these sort of creative things that you might want to do, is that not there for a benefit and enough of a catalyst to get you out of your own head, out of your own way, and say to somebody, hey dad, would you want to get involved in this project? Because there's a great return in it for you and there's a free holiday essentially. I would love you to have the holiday as opposed to some big bank manager or somebody that I don't even know in the city somewhere. Like I said, start flipping the script on things. Every time you have a challenge in your head, make a note of it and ask yourself how you could reframe that. That's the first thing that I would be doing. And then second of all, momentum creates momentum. So start to look to put an investor brochure together, you know, something basic that's just showing what it is that you've done, what it is that you're looking to do. And obviously you can tweak that and move forward, but let's get something on paper first. And then the other thing is perhaps consider letting people know exactly what it is that you're doing, because it's a bit like Gary Vee says, jab, 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 right hook. There'll be all the jabs and softening people up and letting them know what their opportunity is. And then in time, you hit them with the right hook and say, look, next project, just agreed. Does somebody want to get involved in this? Or again, if you create your document, it might be who wants to provide feedback on this. And naturally, people will opt themselves in or out of being interested in actually working with you. We always work on both simultaneously, but it tends to be that the deals come and then you've got a bit of a rush for the money. Sometimes the other way around, but most of the time it is that way. Get comfortable with it was what I was about to say before it cut out, but we'll pick that up again another time. There's 40 minutes on Zoom, is clearly not enough. I need to upgrade and get the premium package, but for now, I've got somewhere to be, so we'll call it a day. Yeah, don't overthink it. Document, don't create. I know you've probably heard that before, but just document what you do. Don't create, don't fabricate, literally stick to documenting your journey and your processes. That is all. That is enough. People start to see through a lot of the bullshit online with social media. People embellishing and making things seem better than they are. Just be honest, be authentic and be true. That in itself will be enough. Have a great one yourself. See you later. What an absolute gent. And this is what I mean. Hashtag we rise together. If you've got some information and you can help somebody else with it, why not help them? Because there's one thing I've learned in this lifetime to be true, and that is that there is a rule of reciprocity. Something given away creates a void or a vacuum within that can only be filled by more of the same. If you give compassion away, you will find people are more compassionate towards you. If you are empathetic, understanding, all of these things, it will only come back and serve you. There's been times in life where we've helped other people out in the past and we've helped them go away and find properties for themselves. And the thing is, when they've not managed to be able to buy them themselves, who have they contacted? They've said, Steve, we've got a great deal here. We can't afford to buy it ourselves, or it doesn't suit our investment criteria. We think it'd be a great one for you. The rule of reciprocity. That you give away will only come back to you and come back to you in abundance.